You've probably heard you can deduct your wedding flowers, your wedding dress, or even the venue as a charitable deduction, or call it a business event if clients or employees are invited. And like most online tax hack, there's some tax law buried in there, but it's wrapped in half-truths and taken wildly out of context. Miss the fine print and your dream write-off could end up in an IRS nightmare instead of a happily ever after. Today, I'm breaking down the real tax law behind these wedding deduction claims, what you can actually take advantage of versus what will get you in trouble, and the one legitimate way businesses can deduct social events so you know exactly where the line is and how to stay on the right side of it. And I'm Jasmine DiLucci. I'm a practicing tax attorney, CPA, and enrolled agent. I got my first tax license in high school because I am obsessed with tax law. And in today's video, I'm going to show you how wedding expenses really work under the tax code, where you can actually turn parts of your big day into a deduction and where the IRS will shut it down. In this video, I'll cover 3 things. First, the real tax law behind wedding write-offs, flowers, dresses, venues, and even business networking claims. Okay, 2 is real court cases where taxpayers tried some of these strategies and what the IRS and tax court judges had to say. And 3 is practical steps that you can use to legitimately claim deductions while steering clear of social media garbage that can get you penalized. Okay, so first, let's start with donating your wedding flowers. Okay, this one has some truth, but it is often exaggerated. Okay, you can donate flowers to a qualified charity under IRC 170C, but your deduction is limited under IRC 170E1A to the lesser of the cost basis or the fair market value at the time of donation. Okay, and for wedding flowers, it always means fair market value because flowers go down, not up in value. But here's the catch. Fair market value reflects what a willing buyer would actually pay after the event. And even if the flowers look fresh, they're no longer new. Okay, they've been cut, handled, transported, and displayed for hours. Most importantly, their value depends on immediate usefulness. Someone would need to pick them up and use them right away, and that's why their resale market is virtually non-existent, and why their fair market value significantly drops compared to the thousands of dollars you spent. It's like a buffet tray. Okay, valuable when it first comes out, hot and fresh, but a day later, even if it still looks okay, no one's willing to pay full price, or honestly any price, for leftovers on someone else's schedule. Even more importantly, the IRS has strict substantiation rules. For any non-cash donation over $250, you must have a written acknowledgement from the charity. If you claim more than $500, you have to complete Form 8283 with your return. And if you're thinking about writing off flowers at thousands of dollars, any non-cash donation over $5,000 requires a qualified appraisal. And let's be honest, no one is paying for a floral appraisal just to take the aggressive position that their used and perishable flowers are still worth thousands of dollars. And honestly, I'm not sure who you would go to for that appraisal. Here's the bottom line. Yes, flowers can be donated, but the deduction is fair market value at the time of donation, which for wedding flowers is a fraction of what you paid. And unless you meet the IRS's pretty strict substantiation rules, the deduction can be denied outright before they even look at the value. Let's move on to number 2, donating your wedding dress. Unlike flowers, this one actually has some more real potential. Okay, the same rule we just covered applies here. Your deduction is based on the lesser of your cost basis or the fair market value at the time of donation. Since dresses almost always go down in value once worn, fair market value governs. The good news is that wedding dresses do have a resale market. Okay, depending on the designer, condition, and age, industry resale platforms suggest values of roughly 40 to 60% of original retail. Okay, so a $3,000 dress might reasonably support a charitable deduction of $1,200 to $1,800 if properly documented. So this one's real. Okay, just remember that the same substantiation rules apply. And don't forget, charitable contributions are only deductible on Schedule A, which only matters if your itemized deductions exceed the standard deduction. So before giving away your wedding dress for tax savings, make sure that there are actually tax benefits to begin with. And of course, you may just want to keep your wedding dress regardless. Not everything in life has to be a tax decision. Third, let's go to deducting your wedding venue payment as a charitable donation. This is one of the most misunderstood wedding hacks. Okay, just because you pay a nonprofit for the use of a venue doesn't mean you've made a charitable contribution. Under the quid pro quo rules, a charitable deduction is only allowed when the amount you pay exceeds the fair market value of what you receive. The deductible portion is limited to that excess, if any, okay? And here's the part people miss. The IRS doesn't have to guess whether there was a quid pro quo, okay? The nonprofit is required to spell it out. If your payment is over $250, which for a wedding venue, it always will be, okay, you can't claim the deduction unless you have a contemporaneous written acknowledgement from the charity. That letter must state whether you received goods or services in return, and if you did, it must include a description and a good faith estimate of their value. And if your payment is over $75 and it's partly a donation and partly a payment for goods and services, the charity also has a duty under IRC 6115 to disclose the fair market value of what you received. In other words, when you rent a venue from a nonprofit, the acknowledgement letter will confirm that you got the benefit of the space. So unless you truly paid more than fair market value, there's no excess to deduct. Okay, which means the only way the venue donation tax hack works is if you can get the nonprofit to say in writing that you didn't receive the venue space that you clearly used. Okay, and let's be real, that would mean asking the charity to lie for you. And if that's your tax strategy, well, you do you, but don't confuse it with actual tax law. Here's the bottom line. Venue rental fees are personal expenses, okay? Only amounts clearly above the fair market value, properly documented in the charity's written acknowledgement, could qualify as a charitable deduction. And fourth, deducting your business as a business networking expense. Okay, this is one that sounds reasonable. You might think, hey, all I do is work. I'm just gonna invite all my employees and clients to my wedding, so why not make it deductible? And yes, IRC 274E4 does provide a 100% deduction for recreational or social events, primarily for the benefit of rank and file employees. But here's the problem. The courts look straight through to the personal purpose. Okay, when the personal purpose is overwhelming, no amount of creativity makes it deductible. And people have been creative with this argument long before TikTok. Okay, the only difference now is that social media makes people with no tax research or tax experience sound like tax experts if they sprinkle in enough confidence alongside their delusion. We already know how the court treats weddings with business guests, like in McReevy versus Commissioner. The taxpayer tried to deduct 2 wedding receptions because 82% of the guests were business contacts. The court wasn't impressed. They called the weddings primarily personal and hit them with severe penalties. The court came to that same conclusion in Haverhill versus Commissioner, where a corporation paid certain wedding costs as business expenses. The tax court wasn't having it, and they said, we think it would be most extraordinary for us to hold that these wedding expenses are allowable business deductions to petitioner. Quite a wedding party did take place. There is no doubt about that, and large expenses were incurred, but we hold the petitioner is not entitled to deduct any part of them as ordinary and necessary business expenses. So what do we know? You can host an event of the same size, even with many of the same people, and deduct 100% of it, but not if it's a wedding. The difference is purpose. A holiday party, summer picnic, or employee appreciation event qualifies if it's for the benefit of rank and file employees, but a wedding won't. So what should you keep in mind? Okay, for charitable donations, it's about the lower of your cost basis or purchase price and your fair market value. If you're donating items from your wedding, like flowers or your dress, it's about what it's actually worth at donation time, not what you paid. Okay, also, documentation matters. Written acknowledgments, Form 8283, and appraisals are required at different thresholds. Skip them and you lose the deduction even if it's legal. Next, Schedule A is the gatekeeper. Okay, charitable contributions only help if you itemized and beat the standard deduction. And finally, purpose drives deductibility. Clear personal events like weddings are never deductible, but employee-focused events can be a 100% write-off. So yes, you can save money around your wedding, but it's rarely the gold mine that social media makes it out to be. So if you're tired of following self-proclaimed tax experts who trade in tax research and tax experience for marketing catchphrases and a ring light, then subscribe so we can make real tax help from a tax attorney available to everyone.